Hello, Uncle Xavier. As you know, I'm your favourite nephew, Jesse Hilleary, and I'm here to help you with your important and life-changing choice of going into business. I understand that you are considering whether to become a franchisee in a dog washing franchise or to operate your own independent dog washing business. Therefore, I am here to explain what due diligence is and how it can be beneficial in making a sound decision during this time. Firstly, it's important to get a theoretical understanding of what due diligence in a business context means. Due diligence can be described as the process of ensuring that investors are getting what they think they are buying and what they are buying is worth what they are paying for. Therefore, this requires an understanding of many various aspects and categories of the business environment you're about to enter, such as legal, financial, commercial, relational, and operational aspects. It is also extremely important to remember that you must make a commitment to continue due diligence process throughout the life of the business. Furthermore, the most difficult but a key feature to due diligence is the scope. Determining the scope of the investigation is a vital prerequisite to assure your due diligence report is accurate. The scope is shaped by both parties involved, being the buyer and the seller, and is subject to the awareness level, appetite for risk, and the budget of both parties. It is also extremely important to remember that the scope is subject to all legislative requirements. Uncle Xavier, you as the buyer have a responsibility to know and understand the risk associated with the business you're buying. However, due diligence equally applies to the seller of the business, in which they also need to take responsibility for any representations made about the business they're selling. Now that we've covered what due diligence is and that both parties must partake in the process, it's imperative to understand the types of due diligence out there. The main types consist of professional advice, personal networks, and your own research, including market research, speaking to other business owners, observing the target business, and other avenues. Professionals involved in the due diligence process that you should use at your disposal are accountants, lawyers, real estate agents, and other common advisors you think that would provide quality information to assess the risk and necessary qualities the business must possess. So what are these qualities that your future business needs to drive the due diligence process? They include the pre-contract budget you will have, your appetite for risk, your prior experience, your education and vocation, and the investment as a percentage of your net worth. In conjunction to the due diligence drivers mentioned, there are also constraints worth mentioning that will call for various types of due diligence to be used. Firstly, technical constraints in the form of diverse skill sets and capabilities to perform the due diligence investigations can arise. Furthermore, informational constraints in the form of access to relevant information to perform due diligence, which can be problematic and expensive, can act as a constraint to overcome. Additionally, a financial constraint where potential investors are reluctant to invest in due diligence can become an obstacle to achieving long-term business success. Moreover, the time between intention and decision can determine the type and extent of due diligence, which can be described as a temporal constraint which investors must be aware of. Lastly, legal constraints can call for certain types of due diligence. The current business environment centers around consumer law. Therefore, professional advice must be obtained in order to correctly proceed with the due diligence process. This includes lawyers and similar avenues. Uncle Xavier, one of the most important questions you first need to ask yourself is why? Why are you choosing self-employment? Are you super passionate about the dog washing industry? Are you prepared to spend the money and the time to get the business started? It could be a long, hard slog to make this profitable, so you must be sure that you love dogs and that you believe you can stay in this industry long term. This is a very important step. Once you've come to the internal decision that this business is for you, it's time to decide on what business model you want to pursue, which ultimately dictate the due diligence process to come. There are two distinct models from which to choose from. These are an independent business model or the franchise model. To help you choose the model that's right for you, I'll outline the advantages and disadvantages for both business models. Firstly, the independent model is split into two types. The first being the startup business, which is obviously starting a business from the ground up. The second being an existing business from which to purchase. The startup business advantages include no prior brand baggage or brand repair needed. Capital resources are purpose specific, as well as no capital outlay for customer base. The disadvantages include the business being unproven and risky, capital intensive at the beginning, and difficult to obtain finance. You'll have to create and build a customer base from scratch, and brand building can be expensive and takes time. The existing business model's advantages are as follows. No exposure to past debts or undisclosed liabilities, not committed to old staff and related internal relations issues, fresh relationships with creditors and suppliers, and simpler asset sales contracts, stamp duty and tax issues. The disadvantages are as follows. No credit history. You may need to replace staff, which can be costly to train and recruit. It may be hard to establish creditworthiness, and the cost of a new structure may be very high. Franchising, on the other hand, has its own set of benefits and obstacles. Advantages of being in a franchise agreement are that you are consistently supported by the franchise. There will be training provided for you and systems and policies. There will be a higher rate of success than a startup business model due to already proven results. And there is already an established reputation and image when buying a franchise. Disadvantages include an ongoing sharing of profit with the franchise. Your business can be affected by other franchises' activity. There is little room for creativity due to franchise control, and there can be restrictions on where you can operate. Also, the products you can sell and the suppliers you can use can be heavily restricted. There are imperative steps in the due diligence process that need purposeful and decisive action when considering entering a franchise or an independent business. You need to perform a credit check on the franchisor or the independent vendor, which can gain valuable insight into the financial environment you will be entering. You will also need to get your hands on a franchise disclosure document, which provides a list of current and former franchisees of the past 3 years. Furthermore, you should speak to existing and former franchisees to gain their perspective of the overriding company. You must keep in perspective that the franchising sector is highly regulated by governing bodies and has safeguards built in to protect you as a prospective franchisee. This provides a massive difference between franchise and independent business, as a franchise is given a lot more advice when entering an agreement. There is a clear difference between entering an independent small business and entering a franchise. Therefore, due diligence processes also differ immensely. As previously mentioned, franchisees have access to much more information and support during due diligence, whereas small independent business owners must usually rely heavily on third-party professionals such as lawyers and accountants. Support is the essential core difference between the two business models. Uncle Xavier, now that you have a broad understanding of what due diligence entails when entering a business and the differences in due diligence process between the two business models, I'll now make some specific recommendations to get you started on your journey. Firstly, the scope of your investigation should be wide to gain as much important information as you can. Therefore, your budget should be large to accommodate this. Next, you should invest in a quality accountant to provide a summary of prospective business financial information such as income statements. Then, you should invest in a quality lawyer to investigate all legal parameters concerning entering your new independent or franchise option. The choice of your business model will dictate what extent your lawyer will need to perform due diligence. I recommend that you talk to other professionals within the dog washing industry to get their perspective and advice on when they entered the market. And I also recommend you thoroughly engage in your own market and online research to fully understand the industry and its obstacles. I believe if you are truly passionate about the industry and excited to dive right in, the due diligence process will be one of the best parts of owning your own business, as the anticipation will lead you straight to success. Thank you.